party that don't know or I'm not related to, I'm not going to have a prohibited transaction. So there's very easy ways to stay away from prohibited transactions. Again, if you're going to self-direct your retirement account, you need to know what prohibited transactions are all about, and you probably need to have someone you can pick up the phone and talk to if you think you might be running afoul of a prohibited transaction. But in any event, I find that the concept's a little overblown. A lot of CPAs and attorneys will tell people to stay away because you might be involved in a prohibited transaction, but it just takes a little bit of analysis to figure out what you're doing and if it's even going to apply. So again, we've kind of walked through some of this, but it's your retirement account doing business with a disqualified person. You can't benefit other people from it. By that I mean, believe it or not, you saw on the disqualified person list, siblings are not on there, aunts and uncles are not on there, cousins are not on there. So I have some siblings that do transactions between their retirement accounts. That's fine, but it's got to be at arm's length fair market value. You can't have a brother and a sister doing a transaction at 2% interest rate if fair market value interest rate for that type of transaction would be 8. So again, you have to do everything arm's length fair market value, even if it's a family member that's not a disqualified person, perhaps like an aunt and uncle. You can't extend credit. What that means is you can't use your retirement account as collateral on a loan that you're making individually, or borrowing from, I should say, and you can't use your retirement account as collateral, and you can't use your retirement account. The other concept, excuse me, is you can't use it as collateral, and the loan, excuse me, has to be non-recourse if you want your retirement account to borrow. So you can actually use a retirement account, and it can borrow. So you wouldn't borrow on behalf of your retirement account. You would have your IRA or 401k go to a lender, and the retirement account would be the lender. That would have to be a non-recourse loan, and that just means that the lender can't come to you personally for any recourse if the loan goes bad. The only thing it can look at towards the recourse is the asset itself that the 401k or IRA borrowed on. So again, some lending rules you need to be aware of. Light bulb just needs to go off when you're borrowing or have any questions about borrowing with your 401k plan. Okay, what kind of items, useful items would I recommend you take a look at if you're interested in really controlling your retirement account moving forward? Well, believe it or not, the IRS has a couple. IRS has a good website, and they have some things called publications that I really like. They have a publication, and you go on the irs.gov, look at forms and publications, click on that, and then you'll type in publication, type in a number, and you can scroll down and see what they all are. But IRS publication 590 is IRAs, 598 is the unrelated business income tax, which really only applies to IRAs with leveraged real estate. Again, one of the benefits of a 401k plan is you don't have to even worry about that little tax on leveraged real estate. Publication 560 is small business retirement plan. So take a look at the IRS website for some of this information. Most people aren't going to go buy the Internal Revenue Code, but the 401k plans are in Section 401, IRAs are Section 408, and Roth IRAs are Section 408, capital A. So just so you know, that's where the information comes from. You don't need to be afraid of that. I've got a book that I'm a co-author of called Leverage Your IRA, and it was written with Matthew Allen and a couple others that are experts in the self-directed world. And through the end of December, I am offering a 30% discount to anybody who listens to this webinar who goes and buys it. And go to my website, iwealthstrategies.com, and you would go to the bookstore section. You see the book there, and when you go through the purchase method, you'll see a coupon code just before checkout. And the coupon code to get the 30% discount is IRA 2015. That's IRA 2015. That's the coupon code, and you'll automatically get a 30% discount through the end of the year. It's a great book on the general concepts of self-direction, and my solo 401k field guide is coming out in January. I'll have that available on my website, and that's basically everything you need to know. Again, I'm a big advocate of education, having people understand what the law allows And then once you understand what you can do with your retirement account, you'll see opportunities. You'll be in webinars like this. You'll understand what the law allows, and you'll just be in a better place to enhance your retirement account because you'll be properly set up to make opportunities when they come down the road. So again, feel free to visit my website at iwealthstrategies.com. And Kim, I'll turn it back over to you, and you can see what kind of questions we have.
Excellent, Eric. Outstanding. Absolutely outstanding. We've got a number of questions to ask right now. The first one is, how difficult to be my own solo 401k trustee or administrator, and what is involved?
Good question. So there's a variety of ways. Assuming you qualify, number one, step one, you have to qualify. You have to have a trade or business that allows you to have a solo 401k. But let's assume you meet that. The next question is, well, geez, where do I go to set up this 401k plan? Now, some of these self-directed IRA custodians that are listed out there, Pensco, Equity Trust, SunWest Trust, they are IRA custodians that will also act as custodians for your 401k plan. Now, you can use a firm like that, but you'll be paying custodial fees and you'll be paying third-party administration fees to keep track of your stuff. What I've determined I like, and I set it up for myself years ago, and my clients really like it, is that I set up 401k documents and I provide education and a record-keeping system so they can be their own trustee and own administrator themselves. Now, they have to be able to keep track of their investments and contributions, but again, I've created a very easy turnkey system so they can be their own trustee, which is basically investment decision maker, and then administrator, which is someone who keeps track of the documents and what's in the plan. So again, I think there's a better model. You don't need to have a custodian for a 401k. Why can't you do this yourself? And so I've created a turnkey approach so people can be their own trustee and administrator, and that's what my 401k plans help people do.
Well, that's excellent. It's kind of a turnkey system, and people who are interested can reach out and talk to you. A couple of other questions. Speaking of cost, here's a question. I've researched self-directed investing, and it seems like there are many costs involved, which concerns me. Help me get over this concern. So clearly one way is to be your own administrator. Are there any others?
Yes, and the one thing to be aware of, and this is something it took me a while to figure out, is that in the traditional financial services world, they're very good. That world is very has been around a long time and is very sophisticated. We talked about the banks and brokerage and insurance companies. They're very good at extracting their fee, pound of flesh, if you will, out of the product, out of the mutual fund, or out of a fee arrangement that might come out of your account quarterly. So people don't have to really pick up their credit card, write a check, take money out of their wallet. It comes out of their account a variety of ways. So when people migrate to self-directed investing through IRAs or even the 401k, they'll say, geez, Eric, there's some of these fees involved. I didn't have this when I had a IRA at big brokerage firm. And I said, well, there's no free lunch. You were paying for it in the product. You just didn't have to write a check for that annual fee. It was coming out of your return. Yes, there's disclosure, but the disclosure can be hard for the average investor to find. So just keep in mind when you do self-directed investing in the IRA world or in the solo 401k world, the great thing is you'll see what you're paying for. You'll see what it costs to have a bank account, maybe a brokerage account that gives you a checkbook in your 401k plan. If you want to invest in Apple stock in your 401k plan, you certainly can do that. And you'll see that depending upon where your brokerage account in your 401k is, you might pay $9.95 a trade, but at least you'll see those items. They're very transparent as opposed to all those fees being bundled by the financial services firms, which really makes it hard for individuals to figure out really what they're paying all in that kind of closed environment. But long story short, Kim, you'll pay substantially, my experience is you'll pay substantially less self-directing a retirement account than you did by having someone else manage it in the traditional world of stocks, bonds, mutual funds.
So how long does it actually take to set up a solo 401k account?
That just takes a matter of days, and I can do that literally within 24 hours. I have someone fill out a form. They basically fill out a setup form with their name, address, their business ID number, a few of those basic things. What is somewhat time consuming, although it's gotten much better over the years, is if you're transferring money from any IRA, whether that's a credit union or a bank or a brokerage firm, we send a letter to that firm saying, hey, Bob would like to transfer $100,000 from his IRA into the new 401k plan. Some of those firms act very quickly and transfer that money right away. Some of them act less quickly, and it can be a week or two. So again, I'm a big advocate of people getting plans and retirement accounts set up, get some money in them, because once you get the structure set up, then if they see on your website, Kim, there's an opportunity, they're ready to make it. They don't have to, oh, Kim, yeah, I heard about this concept. This is going to take 2 to 3 weeks for me to get my money in the right place. So can you hang on to that? I'll get back to you in a while. I mean, Kim, I've had people do deals at Starbucks on the weekend, on a holiday, Monday, at night they meet after work. So if your self-directed retirement account is ready, then you'll see opportunities, and I'm convinced, good fate, good fortune will come your way. If your retirement account has funds in it and you're available and you're out listening, then you'll hear of opportunities and you'll be ready to make them.
Cool, very cool. So here we're going to close with this last one. And apparently I have an echo, so there's lots of me. My CPA mentioned that unrelated business income tax is a problem for self-directed retirement investing. Is this true?
Well, that's why I like the 401k for those self-employed people that qualify for it. Again, the SEP-IRA, which is what most CPAs recommend, is an IRA. Even though it's a small business or entrepreneur IRA, it's still an IRA. Solo 401k is just a different type of retirement account, as we saw. I'd like to say it's just a retirement account on the other side of the fence. And because it's a qualified employer plan, just technical Internal Revenue Code jargon, it doesn't have to pay unrelated business income tax on the most common thing people are interested in, which is rental real estate, for example, or a shopping center that's got debt on it, or an apartment building that's going to go get a loan. And so in the 401k world, leveraged real estate doesn't even have to be concerned about the unrelated business income tax. A SEP-IRA, because it's an IRA, if it invests in a apartment building that has debt, yeah, it has to at least know how the unrelated business income tax works and what it is. And so that's kind of an item for all IRA people. If you have self-employed activity or a spouse that does, and I work with a lot of commercial realtors who have SEP-IRAs who invest in real estate projects, and this is a big headache for them, I say, why don't you just convert your SEP-IRA to a 401k? You won't have to even worry about UBIT. So there's some good workarounds. I tell people in the IRA world, don't get too excited, because you might, if once we do the calculation, you might not have to pay it anyway, but at least IRA people, the light bulb needs to go off. 401k people, they don't even have to worry about it with leveraged real estate.
We really appreciate your insight today, Eric. We hope everyone has enjoyed the presentation. There was a lot to take away, which is awesome. And here are a couple of my thoughts for the takeaways. First of all, plan for retirement. You need a roadmap to go where you want to go, so let's start today if you haven't already started. Consider using the self-directed retirement account to invest in crowd-funded investments. You can have a solo 401k even if you have W-2 income. That is really a very cool concept. That's a way to kind of double down with the money that you're making so you don't have to pay as much to Uncle Sam. And a great cost-saving opportunity is the fact that you can be your own administrator. What did you take away today? We'd love to know. Please give us some feedback so that we can help improve our programming. I would once again like to thank Eric Wikstrom, and to remind everybody that Eric has generously given us a 30% discount code for his book, Leverage Your IRA. Go to his website and input the code IRA 2015 to get that discount before the end of the year. And I'm going to be sending you a survey about today's presentation. Please do your best to get that back to us, as well as a recording. You'll have an opportunity to review it again at your own leisure. Of course, we'll have Eric's contact information, so please feel free to get to him any additional questions we may not have gotten to today. And coming up in the new year, our gift to you, January the 28th at 11 a.m., free labor, subsidized employment for small business, featuring Chris Mann of Volunteers of America, Northern California and Northern Nevadas. And then in February, buy and sell agreements, featuring Al Statz, business valuation, merger, and acquisition expert. So please join us for all of these informative webinars in the new year. As a reminder, if you are a business owner and entrepreneur seeking to raise capital, please give us a call. And if you have any additional questions about today's presentation, please give Eric a call. And with that, I will say thank you all very much for joining us this morning.